The Banco Central would probably remain dovish and might cut policy interest rates again up to the first quarter of 2021 due to a bleak recovery outlook. That's according to analysts. Nomura Global Markets Research said rate cuts are warranted if the pace of economic recovery continues to underperform official forecasts. It said more downward adjustments from the BSP would be likely as inflation remains benign and stays within the target of the BSP, whose decisions continue to rely on data. The BSP expects inflation to average at 2.4% this year and 2.7% in 2021, well within its 2 to 4% target range. Nomura is forecasting that the BSP will slash benchmark rates by a total of 50 basis points to 1.5%, 25 basis points in December, and another 25 bips in the first quarter of 2021. Nomura's outlook comes just a few days after the Banco Central unexpectedly cut benchmark rates to a record last week, citing uncertainty due to a spike in COVID-19 cases globally and effects of the recent typhoons. The overnight reverse repurchase rate now stands at 2%, lending at 2%, and finally, deposit facilities at 1.5%. Meanwhile, Mitsubishi UFJ Global Markets Research said the central bank might also cut the reserve requirement ratio for banks or may do another round of lending to the national government. The BSP has slashed the ratio by 200 bips to 12% for big banks so far this year. Mitsubishi UFJ also said the country is unlikely to acquire COVID-19 vaccines until first half next year, which could lead to a slow recovery as restrictions remain in place.